Hello guys, welcome to the Trading Parrot. We're going to do the market morning update. Today is Monday and there is a CME gap that has formed. We'll cover that, the 4-hour time frame. We'll look shortly into the order book to see if there are any new developments, and we close the video looking at the general markets. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Having a quick look at the news in here to see if there's anything really relevant to me. We already read this news, so there's nothing really standing up. There is one news that came out 14 minutes ago saying Bitcoin price risk to crash to 31K amid fifth wave impulsive completion. This is crazy. There's no chart, just an explanation, which I'm not even gonna bother to read. In this news, Crypto Potato is expecting some volatility. Let's go with more serious stuff. Remember that this week we have the core inflation rate on Wednesday, and on Thursday we have PPI as well. So we should be expecting some volatility. This is the way I left the Bitcoin status yesterday, and nothing has really changed since yesterday. On the weekly, the danger, we could say, is still there because we are very close to that support of 104.4, but we managed to put another weekly candle holding that level, which is great. Let's have a look at the CME chart. You can see that we have created a gap. The gap is not as big as I was expecting it to be, over $1,000. Instead, it's just $585 on CME, and we can see the equivalent on Binance exchange listing will be around $800. So let's place the lines, and that will be from 104,642 to 105,300. And we are right there sitting on top of that. I wouldn't expect that to last any longer. Let's have a look at the 4-hour time frame. On Sunday, at around 10 a.m., I was shouting that the RSI was breaking out with my Patreon community. I shared a little bit of that on Saturday later on Telegram, Instagram, and Twitter, and I mentioned that I was not interested in this breakout over the weekend with low volume, actually declining volume, which is even worse, forming a CME gap and all of those things. There are some bullish things. Yeah, there is the leverage squeeze buy, the CPR pivots that were reclaimed, but we still don't have a higher high, and there's tons of fair value gaps below the price because the move was really sketchy, no stopping, no swings. Well, it's been kind of the modus operandi across all this area, that you move up and then you never revisit, never take care of the imbalances. But I don't like to trade like that, a breakout. You know, I prefer to accumulate at areas of support. So here we are at the moment, and this is kind of de-inflating, coming back to where it came from. It goes higher, but every time it comes back to the area of the breakout, which is 105.2. And you can see that the RSI rolled over multiple times. It's almost like it's trying to do a second retest after having already achieved those highs of 106.5. And part of that is because of the selling wall that we were talking about yesterday that definitely has influenced the price. On the daily, we haven't managed to break beyond 106.2, which is the top of the range on the volume profile that we've been for 10 days. Today should be the 11th day that we try and try and try. This is all in the context with yesterday confirmed breakout. We still hold there. It's not a fake out so far because we are sticking there right against the price resistance. The RSI is happy to go. We left yesterday some values in the video. You can go and see the full detail, but those values, the immediate support, which is the green line, 44.45 RSI. Then we got an RSI of the percentile at 77, and then the 85, which is the top of the range. If you want to know why I have these magic numbers, watch the video yesterday with the full explanation. The we go all to hell kind of number is here at 26. And the equivalent prices are on the low end at 88, then the support today at 102.5, then the first bullish target 122, and here we have 139.762 for the most bullish if we go to heaven instead. MACD is slowing down the momentum to the downside, still far away from putting a bull cross, but you know, we are hinting towards that direction. I wouldn't be surprised if we get one during the middle of this week. You can see that we have some sort of hanging man in here. It's more or less the third week that we managed to defend the previous highest close, and that's how I understand that it's still a very, very relevant number, a line in the sand for the weekly time frame. If we put a close below 104.4, it's very likely that we're gonna visit the bull market support band. On the first candle, that bull market was below the mid-range. On the second candle was the middle range, and last week it was above the middle range at 95, but it's gonna continue to catch up with the price. So the longer we stick around here, we could find the support a little bit higher. So we get a middle ground support in here from the incoming bull market support band, but we still have that middle range at 93.7. A couple of weeks ago, we had the bear cross on the stochastic RSI, and with the closing price of this week, we're just sideways, and with the beginning of the week, we're pointing down, preparing for the stochastic to reset. Of course, that is not absolutely guaranteed. You can see that multiple times halfway through the reset, you come back to the top. That is what happens between August and the end of the year in the past cycle in the equivalent year, which is the topping year. Let's have a look at the CPR. So we reclaim the CPR pivots for June, and we are just sticking around the highs of the beginning of the month. Interestingly, the volume has been only down, but with this move up of 3 candles, the volume is picking up in here, but still not going into the green or anything. On Friday, I shouted loud on public social networks, Telegram, Instagram, and Twitter, that there was an leverage squeeze buy signal that has been performing magnificent in this cycle, and that trigger right there at support. With this move up, there hasn't been, relative to prior profit taking, anything substantial. It's just going sideways. There's still not a lot of panic selling additional, which is below 1, or huge profit taking, so it's been a quiet weekend. At least in terms of price action, in terms of orders in the exchange, it's been extremely busy. I'm going to show you just in a moment when we get into the order book. And Big Whale Explorer has cooled down again. We are in the area of green. That means that there are further withdrawals and deposits from large whales. But we say that we are going to kind of ignore a bit this indicator for a while, because there's a lot of exchange of hands of institutions that are kind of messing up with the idea of this indicator, which is to focus on what the whales are doing and know those big buys of this company is buying this company, and they need to transfer things from one wallet to another, because that is not really representative of the original intention of the indicator. We are currently in grid at 62. We didn't get any new signal from Cerberus, and the degens of 50x, 100x are still located around 107 to 107.241, which is an area that over the weekend I was thinking maybe I might short this, just because it seems like they're going for that. And something weird happened, which is if you do a Fibonacci extension from here, you can tell that the one extension should have hit 107 by now, but instead of that, this push here barely managed to get to 106.5 and came back. So it's rolling over, it's getting shy about hitting that liquidation level. And I'm still unsure if this is just because it's waiting for the general markets to open, if something is incoming and they need that strength, or something else. Despite of that, since we are already with the general markets open, whatever I decide, I'm gonna wait for markets to really open to get a full picture. Let's bring in the 25x's and the 10x's to see what we have. You can see that 100k.2 is the heaviest, and is just about 5.2k next to the price. And now we have a 6.8k that we need to go up to reach the level of 100.12,500 to hit that liquidation that we form with the new all-time high, with the recent one. That is probably around the same kind of amount of liquidity. This one is very thin, but is pretty high. As you can see in the hill here, is higher than that, but this is spread away. So if you manage to do this whole journey and get into 113, the accumulated liquidity that you will hit probably is more than if you just come here and hit below 100k, slightly lower. Just do a little quick math of this hill versus all of that. Probably the top one wins. Just to keep in mind, it's not that that necessarily is enough of an argument to decide direction, but it's always an important exercise to observe these things, and I think everybody should. whenever there's a clear absolute winner, if that at the same time is in confluence with other things, you might be sitting on top of a massive alpha. And since this is a morning update, this is what I do every morning. If you're looking for a morning update, you can borrow any parts of this, modify it, and do whatever you please. This is the head and shoulder. I will say if we start breaking that 107K, it's a big deal because it breaks the neckline of the head and it starts going up towards the big liquidity, and it also breaks the right shoulder, making it too big relative to the left one, in which case we are not really going for the next liquidity, which is the leftover of the 100K below, slightly below that green area in here, or the golden pocket extension of this move down, which will be around 95 in the middle 90s and overlapping with this green. Let's see liquidity on the heat map. You can see that 107 is still there, and I will say is the lightest one across all this range in here. It's also the highest bar on the liquidation map at 107, followed by levels that are around the 110 and the 103 that are kind of similar. This is how it looks, FAR charts this morning. Very interesting to see a decent level of support here at 98, and we are opening the week with the purple whales pointing down. The brown ones are holding positions that are way larger, 10 times larger than the purple ones, but the purple ones seem to be a leading indicator. They tend to point where the price is gonna go after. I have observed that myself, and Keith, one of the founders of Material Indicators, which own FAR charts, is always saying that as well, because it's really the case. That support there at 98 to me is sketchy. It is not a forecast, it's not guaranteed, but imagine if this breakout on a weekend on low volume eventually pinch 98. Wouldn't that be amazing if you knew that up front that you're gonna hit that red level at an RSI of 30? And also over the weekend, I did this channel on the 4-hour RSI where you hit these low levels one by one, and the next one is 70, the support is 50, and the breakdown points towards around 30 RSI on the 4-hour. This micro channel here that I'm drawing that has already broken out, it should be going to 70 on the RSI, which is around 108.3. That should be the next thing. But if it fakes out and if it loses support and it re-enters the descending micro channel in here of around 51 support, and let's confirm that that is 51, no, it's 50, let's put it to 51. If we were to break down below 105.3, basically closing the CME gap and doing so too slow, so that candle closes occur below 105.2, then there is a chance that we break down to 30 and hit that percentile at the low end. That is around 101.6. That will form a double bottom around this area. If we break that level, definitely then the 98 is possible. Notice that the liquidity is slightly below that. It's at 100K, not at 101. So just trying to understand where are the pieces of the chess located for this week and what to keep in mind when I start smelling some direction. Without the general markets opening, all we have is this sandwich of liquidity that doesn't allow really to decide a clear winner, a clear direction. All we know that is that they are containing the price. This is not just price suppression, but it's actually price compression. You hit below the price, you have massive amount of liquidity defending a break below 105. And on the top, you have also a pretty decent selling wall left over. When we were at around 106, that was on the 7th, on Saturday, look at the selling wall from 592 all the way to here. There is 1, 2, 3, 4, 5, 6, 7 levels in yellow. Now we have just 4 in yellow. Below the price, we have 1, 2, 3, 4, 5-ish. So it's 5 versus 4, but I don't need to do the math. Instead of doing this manually on High Block Capital or on different platforms, they give you the bid and ask ratio or the order depth. It's the same on Market Monkey. You get it in here, on High Block Capital in here, and you can see this in green. You just need to make sure that the depth that you're using, in this case, the 5% is equivalent to the 5 or 2.5% that Market Monkey Terminal is using. There's some difference in the way they calculate things, but the idea is the same. how many orders are below the price or above the price. The red is above the price. This is ask liquidity, and we are flipping into green. So they are defending a little bit more than what they were doing over the weekend. Notice that they were defending the price and the price was rallying. It had to slow down thanks to all this selling pressure. Some of that were orders that got filled around 106 with shorts. How do I know that they got filled? Well, the funding rate went into the red massively over the weekend. All this move of funding rate hitting red every time that is very low, it's because there was an excessive amount of limit orders sell with perpetuals that were shorting. And you can see how we are becoming lighter in this area, these 4 top levels there, from being very dark on the 1%, no one defending the price. Suddenly, we are starting to see a little bit more defense, the longs stepping in. As the price has gone up, we have now a delta of 200k, putting the longs at slightly higher risk. In terms of fair value gaps, let's see the imbalances that we can catch on the 4-hour and daily. And we have these 2 fat dudes at the low 102, and then very micro fair value gaps below. And on the top, this recipe to break 107, which we still don't use for some reason, which I'm surprised because this overlaps with the degens of 50 and 100x that I show you on Trading Different, and still the price doesn't want to break 107. I think breaking 107 is a huge signal, and these people crowded here on the top and the bottom are just not wanting a breakdown, neither a breakout. And this is definitely affecting indicators and getting all retail to think we are in the presence of a healthy breakout. And so far, the breakout is still there. That's kind of the message of this, which looks to me like absolute manipulation. I don't think that those are coincidentally traders placing their orders right there. There's some of that, sure, there always is, but you know my point. General markets, let's see how we are with the dollar coming down, gold back to the breakout area. As you can see in here, we close on Friday below the resistance on gold, and we say we need to check this week candle, how is it gonna look. And you can see that on the RSI, the new candle starting just a few hours ago is pointing above the breakout, which is gold, right? So safe haven, that is not what we want to see. Nasdaq is right there at the resistance. Again, volatility index is right at the support. On this other listing of Nasdaq is looking like a breakout that is extremely close to the resistance. So if it is a breakout, it's just too humble to see. S&P a little bit more into the breakout, but in this other listing is again below resistance, as you can see there. Let's see if we can catch some pre-market prices. I think it's too early. No chart is showing me any pre-market, so I'll have to look on that later. Guys, if you want to trade $500 for free, check my Bybit link in the description. It's offering currently a $500 position airdrop that you can use to trade any of the symbols in this list. Just open the link and click register to claim, then choose which coin you want to trade, and you get to keep the profits of doing so. If you want to stay out of KYC requirements, then consider the exchange Bluffing, which is currently offering $10,000 in rewards based on deposit and trading volume. This campaign ends on the 10th, so just one more day to take advantage of this specific campaign. Being non-KYC means that in just 30 seconds you can deposit and start trading with leverage, Bitcoin, altcoins, anywhere you live. And if you scan this QR code validating your new shiny Bluffing account with my link supporting the channel, if you meet these requirements, you get access to all the indicators in my Patreon shop, including the whole arsenal of Pine scripts. Many of them are the ones that I'm using in every single video, and you can get access also to the Telegram charts that allow you to see all my charts with all the drawings 24/7 as many times as you want. Not just Bitcoin, altcoins, and general markets. All my charts are all here. If one is missing, you knock on wood, you knock on the table, and we'll get it there for you. Thanks so much for watching. I'll see you in the next one. Bye bye.